are we heading slowly towards a recession?
Actually, what we're saying is that we're heading slowly towards lower growth. And the biggest risk that we see to these projections, beyond the number that you have just quoted, is that we remain stuck, engulfed at very low level of growth. And that is largely due to the uncertainty that's been created by the trade conflicts all over the world, and that starts affecting not only investment but also consumer. So our message really is to hold this uncertainty and to leverage on the low rates, which will remain visibly low for quite a while, to invest and to get us to lift the world out of this very low growth danger.
Laurence, you basically say that it's really up to governments to maybe do more to get us out of this rut through fiscal spending. Do you think in Europe this will actually come?
Actually, as you know, we've been now arguing for this for quite a while. And what makes us a little more hopeful is we are seeing some governments moving. For example, 2 days ago, the Netherlands actually published a draft budget with close to 1% of GDP fiscal support, and also very much geared towards investment in what they want to do. So I think we are seeing signs that this debate is actually not only hitting off, but also starts being implemented.
Laurence Boone, good morning and congratulations on a really profound report. Joyce Chang of JP Morgan was on the other day, and she models out a China GDP out there somewhere of sub 5%. You have a view 2020, you finally break the 6% level. What is the significance of OECD modeling a sub 6% China GDP?
So I think China is actually a very important subject to raise when we come to discuss the projection. So thanks for this. What we are saying for China is that first it's slowing down progressively, which is good because it's rebalancing away from an export-driven economy towards a more consumption-oriented economy. And to that I would add two caveats. It has an impact on countries that used to export a lot of capital goods to China. There's still a huge demand there, but it's moving in terms of product. That's the first thing. And the second, we know that the Chinese government is actually supporting this soft landing with some fiscal and monetary measures, and that the way it's being done is a bit uncertain.
Laurence Boone, as we speak, the President of the United States is using his second favorite vehicle. This would be a conversation with our good competitors at Fox News to talk about a need for America to catch up with the lower interest rates of other central banks around the world, those with a slower economy. Would you define for our audience right now, are we in a race to the bottom where it is a race to see ever lower interest rates to outdo each other on a relative basis?
So let me make this clear. We've been calling and recommending more accommodative monetary policy for the main advanced economies, but we are also, and it's good, that's what we're seeing, which gives predictability and visibility for the rates, which are going to remain low for some time. But what we are saying, which even more vocally, if I may say, is that governments should actually leverage on those rates to invest in much needed infrastructure. Globally, there's a need to invest for about 6 trillion of network infrastructure, and that's urgent. So it's the turn to governments to act.
Laurence Boone, how does the dynamic in oil prices, given what's happened in Saudi last Saturday, change your outlook?
So that's the first thing I would say about oil prices is the situation is obviously runs the risk of elevating uncertainty. And as uncertainty is undermining investment and therefore growth, that's our main concern. Now, when it comes to the oil price itself and the impact over the past few days, then prices have come off. So at this stage, it looks okay. But obviously, if we were to see like a $20 rise per barrel, that would have some impact. It's roughly 0.2% growth less, and it's 0.25 percentage point of inflation. And last but not least, it impacts in a disproportionate way emerging market economies, and some of them are not in a great shape. So we don't need this uncertainty, and we don't need this shock.